Hello everyone, and thank you for watching Optimized's monthly energy market update for September 2025. I'm Mike Stafford, one of the risk managers within the trading and risk management team at Optimized, and I'll be talking you through the major drivers of UK gas and power prices over the last month, alongside taking a look ahead. On the geopolitical front, August saw the first in-person meeting between US President Donald Trump and Russian President Vladimir Putin since 2019. On August the 15th, Trump and Putin met in Anchorage, Alaska, with Russia's invasion of Ukraine as a key agenda item. Optimism around any potential halt to fighting in Ukraine prompted bearish trading in the build-up to the meeting, with front-season gas prices hitting a 16-month low at the close of trading on the 15th. However, the meeting delivered very little by way of progress on ending the war. The potential return of piped Russian gas flows to Europe, which is always the lingering question for gas and power prices behind any Ukraine talks, therefore remains, as we've said before, in the high-impact, low-probability quadrant of a risk management matrix. Of course, Russian gas does not rely solely on pipelines to access global markets. Despite long and very well-documented efforts by European politicians to wean the continent fully off Russian energy imports, the Russian Federation is still responsible for around 11% of LNG volumes imported into Europe. Europe indeed is not Russia's only market for LNG either. In late August, China received its first LNG cargo from Arctic LNG 2, a sanctioned project in Russia's far north. This tests US willingness to firmly enforce sanctions and, in the absence of a strong US reaction, could signal to other buyers globally, including India, that Russian LNG can be imported without consequence. Staying with India, August also saw the imposition of 50% tariffs on India by the US in response to India's purchasing of Russian oil. The world's most populous country is not a major importer of LNG, representing just 7% of global LNG demand in 2024, and UK gas and power markets did not show a strong reaction on the day the tariffs took effect. However, we continue to watch the wider realignments of global trade very closely. Staying on the LNG front, the market remained well supplied during August. Northeast Asian spot prices for the month were at the lowest year-on-year level since 2022, and while China watchers may have noted Chinese LNG import volumes increased for the fourth consecutive month, it should also be noticed that China's LNG imports remain year-on-year for each month, with the last month in which there was a year-on-year increase coming all the way back in October 2024. August also provided a visual spectacle to remind us of the coming supply glut in LNG. At a sail-away ceremony in Shanghai, staff from Italian energy multinational Eni joined staff from shipbuilder Wison New Energies, marking the departure of a new floating LNG production unit bound for Eni Congo, a new LNG export terminal due to go live by the end of 2025. European gas storage fullness levels continued to creep reassuringly upward during August, with aggregate fullness on the first of the month sitting at just under 69%, but creeping up to 77% by the end of the calendar month. Analysis from the end of August identifies that even in a bullish scenario, storage fullness by the 1st of November should hit 84%. After early anxieties around how much gas would need to be injected during the summer of 2025, the continent approaches this winter with a fair degree of confidence about fullness levels. Late August and early September also bring with them the second of the annual peaks in planned preventative maintenance. PPM outages for the period 30th of August to 18th of September sit between 120 million cubic metres a day and 139 million cubic metres a day, reducing flows into the UK via Langeled to around 10 MCM per day over that period, a reduction of over 80%, with withdrawals from the UK storage facilities largely picking up the shortfall. As every year, these outages represent a known, and markets are more likely to be moved by adjustments to outages, either in the form of early completion of maintenance or unplanned extensions. August also saw the fourth and likely final heatwave of 2025, with temperatures over the bank holiday weekend peaking at just under 30 degrees Celsius. The 46-day weather forecasts at time of recording show UK temperatures broadly above seasonal normal until early October. While the usual caveats about treating longer-term weather forecasts with caution apply, it is accurate to state that average temperatures dropped strongly over the course of September. And over the coming month, we will begin to see gas for heating kick in again after the summer lull. Wind generation was boosted early in August by Storm Floris, with long spells over the 4th and 5th of the month seeing wind power producing well over half of Great Britain's outturn. Looking ahead to early September though, current forecasts are for outturns slightly below seasonal normal levels. Overall, a relatively loose supply and demand balance has helped UK gas and power prices for the front season hit 16-month lows. After testing a support level several times over the course of summer 2025, price points for this winter breached it in late August, getting below the previous low seen on the 29th of April. While the additional LNG volume to come online over the course of this winter will likely provide some mitigation of upside price risk, it seems unlikely that there is strong further downside opportunity until we are beyond the halfway point of the winter 25 delivery window.